Assalamualaikum warahmatullahi wabarakatuh.
Shalom, Om Swastiastu.
Nama Budaya, greetings of virtue, peace, and good health to all of us. Good morning, distinguished guests, ladies and gentlemen. And thank you very much for coming and welcome to the
G20 Digital Innovation Network. Give a round of applause for our event this morning, ladies and gentlemen. Thank you very much.
First of all, ladies and gentlemen, allow us to reintroduce ourselves. My name is Sarah Wayne.
And my name is Ralph Tampubolon. Welcome. Both of us will accompany you during this event for today. And both Sarah and I are fully vaccinated against COVID-19. And this event has implemented the applicable health protocols. Now, before we begin, we would like to greet and welcome our panelists and moderators and all attendees of the G20 Digital Innovation Network Conference.
And ladies and gentlemen, yesterday we have listened to a keynote speech delivered by the Minister of Communications and Informatics of the Republic of Indonesia, Bapak Joni G. Plate, regarding the rocky shoals ahead averaging digital transformation to embrace the uncertainties of the future.
And also a panel discussion which discusses the perspectives on the future of tech industries, from Indonesia's early unicorns and a shift towards sustainability, advancing sustainable investment in the post-pandemic era.
And now, ladies and gentlemen, on our third day today in the Digital Economy Working Group, DEWG Forum, Indonesia is also championing the G20 Digital Innovation Network, or G20 DIN. And this year with the theme of the rise of digital economy, post-pandemic recovery, and beyond.
It addresses three main objectives, the first being showcasing innovative solutions from startups in priority sectors. And the second being knowledge and insight sharing on innovation emerged during the COVID-19 pandemic, which supports post-pandemic recovery. And the third objective, to enhance multi-stakeholder partnership by providing business opportunities and momentums to network and collaborate. Now, policymakers will be able to see how innovation can tackle society's complex needs and share international solutions to the world's problems.
And lastly, ladies and gentlemen, corporates will be able to explore opportunities to invest and also to invent on innovative solutions that might help their businesses to grow. And now, ladies and gentlemen, we will start our first panel discussion where we will be discussing regarding the weathering the storm, a global tech investment outlook. With our panelists is the first, Mr. Chris Lee, the partner of SoftBank Vision Fund, Mr. Prasam Prakas, the partner of Axel, and Mr. Andrew Shun, the partner of NEA.
And for our moderator, it will be Mr. Jeffrey Joe, General Partner Alpha GWC Ventures, an early to growth stage Southeast Asian ventures capital firm with an Indonesia focus. The firm currently manages around 650 million across 3 active funds and 70 active portfolio companies.
And Mr. Jeffrey Joe was also the COO of Groupon Indonesia and a consultant at the Boston Consulting Group and Ernst & Young. He obtained his MBA from UCLA Anderson School of Management and graduated from Harvard Business School's Owner-President Management Program. And Mr. Jeffrey Joe is also a member of the Young Presidents Organization. So without further ado, ladies and gentlemen, please welcome onto the stage our moderator and panelists.
Thank you so much. Good morning, everyone. It's Sunday, 9:30 a.m. It's not easy to have a session at Sunday morning, but I can promise you that this is going to be a really, really good session. Why? Because when we talk about digital innovation, when we talk about, especially in the past 2 years, it's a very, very special period of our lives. I don't think it's easy to set up such a distinguished panel that we have today. That's all of them representing the world. Yes, we are in Indonesia. I'm the Indonesia-focused guy, but we have all these three gentlemen representing the world, investing all over the world with specific countries or region. And I'm sure we will hear a lot about the view on what's happening now, what can we look forward in the next few years from these three gentlemen. I would like to start by introduction of the three panelists. I will let Prashant, if you can share a bit about yourself and the firm.
Jeffrey, thank you for having me here. It's a pleasure to be here in Indonesia. And next year, the G20 is in India. Hope to have you there, yes. Right? So just a little bit of background on Accel. So we got started in India about 13, 14 years ago as a seed fund, one of the first seed funds in our country. In these 14 years, now we have made around 300 investments, and of these 300 investments, we have about 25 odd unicorns, and we manage around $2.5 billion of assets from India. So it's been a very interesting journey for us. When we got started, there were less than 1 million digital devices of all forms in India, including laptops, mobile phones, and any device that you can think of. And today we have 600 million smartphones and one of the best digital infrastructures in the world. The most recent data would be the number of digital transactions monthly now we do about 250 million digital transactions just on UPI every day. And I think in the next 2 to 3 years, the number of UPI transactions would be greater than Visa and MasterCard together globally, right? So that's how big the number of transactions are. In terms of the trend in India now is not only to build in India for India, but the most recent trend is, and which Accel has been working for the past 10 years, can Indian entrepreneurs build in India but for the rest of the world? And we can talk more about that, but Jeffrey, thank you for having me here again.
Thank you, Prashant. Now maybe Chris?
So, hi, my name is Chris Lee. I'm part of SoftBank's Vision Fund. It's a real pleasure to be here and an honor. I sit in Singapore, but SoftBank Vision Fund is a global fund. We have 14 offices globally. We have been active in Southeast Asia in this region, which I'm part of. You might have heard of some of our investments. Grab, Goto, Caro are some of our investments. We opened an office in Singapore 3 years ago when I joined. We've been quite active in the region, and we continue to be so. Just in case, SoftBank Vision, in terms of SoftBank Vision Fund, we invested about 150 billion globally out of 2 funds. Our second fund is a little over 50 billion. Again, we invest globally, but in terms of this region, I'm very optimistic. We have a portfolio of about 15 companies in the region. We continue to be active. I'm very long. I'm not from Southeast Asia, I'll admit. I'm Korean by background, grew up in the US. But I want to stay in Southeast Asia because I see the promise. I go to Jakarta all the time, other countries in the region as well, and I see just the underlying activity of the startup scene. We're later stage, but I work closely with my partners in other VC funds at early stage to cultivate talent and of course invest in them. So again, I'm very long and excited about the region, and again, pleasure to be here.
Last but not least, Andrew.
Thanks. So I'm Andrew Schoen. I'm a partner at NEA, which usually sounds like a pretty large venture fund, but when I'm sharing the stage with SoftBank, I guess it sounds a little smaller. We manage about 30 billion of committed capital across our current active funds. Our latest flagship fund is a $7 billion fund. We invest that into startups globally. We've been doing that for about 45 years as a firm. Over that time, we've invested in just under 1,000 companies, so fairly prolific investors, not necessarily spray and pray. We're not doing 500 investments a year, but fairly prolific. of the 1,000 companies we've invested in historically, about 675 have gone on to exit successfully, which is more number of exits than any other venture fund in history. We're certainly proud of that. I think we're also proud that about half of those exits, so approaching 300 now, were IPOs, which makes NEA the largest backer of startups to have gone public. We're certainly really, really proud of that because when we back a startup, our goal is to build something impactful. And in many cases, that has meant an independent public company. So that's really our mission. That's what we're looking for when we meet with any prospective investment. We're a global firm, so although I sit in the US, we don't have any constraints geographically on where we can invest. We do everything from early stage to late. The majority of what we do is early, but given the size of our fund, we're able to back our companies all the way from the early stage and invest in every single round up through IPO. So I'm a partner at the firm. I've been at NEA for about 8.5 years. I spend time here on Southeast Asia. I also spend time on B2B investing generally in the US. I do a little bit of deep and frontier tech investing and a lot of software investing. So prior to NEA, I was at Blackstone for a couple of years on their M&A team. Prior to that, started a company in the digital media space called Flickstart. And I'm really happy to be here and spending more time in the region. So thank you for having us.
Great. So just want to highlight one thing. I just want to understand, make sure that everyone understands who we have here in the panel. Occasionally, I will say that we are one of the largest funds in Southeast Asia. Today, I will not say that. The reason why is because we have the multi-billion and some of the best fund managers here. And also to highlight one thing, all of them have actually invested in this region. So Axel have invested since I think a few years ago, also with Vision Fund, and NEA just had their first major investments this year, right? So it's really amazing to hear their perspective in their respective regions and also what they see in Southeast Asia. But we have the multi-billion-dollar fund here, except of the outliers of Vision Fund of 156 billion, right? So we'll really love to learn what you guys are saying. Let's start with in the past 2 years and this year. I think it's a very, very different time that we are living now. Can you share a bit on what have you seen? What are you doing now? How is this year different with the past few years? Maybe we can start with Andrew.
Yeah, sure. Happy to kick it off. I think we've all seen the sea change in valuations over the last 6 months. I think we're in a pretty unique market cycle. Right, this market cycle is driven most strongly by central banks and policy. Sure, that might be in response to certain global events, but this is unique in that the cycle we're in is really dominated by kind of Federal Reserve and central bank policy. And what's unique about the moment we're in right now is that there's no obvious and immediate catalyst for another V-shaped recovery, right? So I think at the beginning of the pandemic, there was obviously an initial catalyst to the downside, but a very quick recovery based on a strong response. I think we're seeing a strong response now, but on the other side, right? We're seeing a strong response to inflation and price stability, and based on the historical precedent of the last 2 years, it seems unlikely that response is going to go back to a dovish posture anytime soon. So I think weathering the storm, which is the title of this panel, is the right way to think about the environment that we're in, right? It is a storm, it's going to last a while, and it's about endurance. It's about weathering that storm. That's how I describe the climate that we're in currently.
And I understand that a majority of your investment is focusing on the US. Can you share a bit if you have any indication or numbers on, for example, in terms of the deal pipeline, early stage or later or growth stage number of companies that you look at and investments this year compared to like a few years ago? How would you compare the numbers?
Yeah, I mean, it's a great question, right? So at NEA, we actually just closed on our most recent fund, which is the $7 billion vehicle I mentioned, just a few months back, right? So from a capital deployment standpoint, we're still meeting with tons of companies, right, on a daily and weekly basis. And I think over the next year or 2 years, there's going to be a bifurcation between the public markets and the private markets. A lot of capital in the private markets has been raised over the last year. right? So 2021 was a landmark year in terms of venture capital and growth equity fundraising, right, among fund managers. And that capital has to be deployed on a timeline, right? And so there's a supply-demand piece, right, in addition to a macroeconomic piece. There's a supply and demand piece for capital in the private markets. And there's a large supply of capital, right? You know, there's quite a few firms with dry powder that are going to be looking to make investments over the next couple of years. At the same time, I think valuations, especially in the public markets, will stay at what we might think of now as depressed levels, but actually, if you zoom out, are sort of normalized levels. And whether that will, you know, stay the case in the private markets, or whether private markets will actually start to creep up and maybe even get ahead of the public markets, to me, that's an open question. But from my standpoint, I'm meeting with just as many companies on a daily and weekly basis as I ever have.
Great, because at least what we are seeing in Indonesia, the number of founders that's come to the market this year is actually declining. Because I think the founders understand that it's not easy to raise capital now, so maybe even the founders is also timing the market when they want to start the startup. But Prashant, what do you see in India? And also the region.
Yeah, the region. So in terms of liquidity in the market, I think this has been, like Andrew was saying, a great year for Indian targeted funds, right? So between Sequoia, Lightspeed, Matrix, Axel, and others, just this year for India, specifically new capital of about 3 billion has been raised. So there's a lot of dry powder. Now that's the kind of the headline. But there's still, you know, I was talking to one of the entrepreneurs, and entrepreneurs are good in characterizing markets. So I said, what do you make of the market? And the characterization he said was sleepy.
Sleepy, yeah.
Yeah. So the market is sleepy there. There's a lot of money, but you know, people are not really acting and working on the money. Going to entrepreneurs starting out, we see a big difference between young entrepreneurs. The number of young entrepreneurs coming out is almost still the same. Maybe there's like a 10-20% drop, but it's not like a 50-60% drop in young entrepreneurs. But experienced entrepreneurs who had got used to $10 million seed rounds and were very risk averse and would get the same kind of almost the paycheck they were getting in there, those have crashed by about 90%. So we don't see many experience, I mean, so people coming out of Flipkart or the Byju's or you know, all the larger Indian companies, those have gone down. So I think we'll have to see when they will pick up. And finally, when it comes to you know, the type of companies that are getting funded, we can discuss a little bit more. But you know, the companies that were out of fashion last 2-3 years are now back in fashion. So there's a little bit of change of guard of who is now a more exciting investable company. We can talk a little bit more about that.
I want to double click a bit on the type of founders that's coming to the market, right? The younger founders versus the more experienced founders. From your perspective, how do you see them? Equally good because there's pros and cons, or any preference towards one or another?
I mean, we've always believed that a new generation of founders are the ones that create the most disruptive tech, right? Of course, the repeat founders get the best valuations, but I don't know if that is always justified. But you know, people coming, if you're building enterprise tech, for example, I think for enterprise tech, you need experienced founders. So that is going to be a problem. You can't have very young founders building from India for US enterprises without the right kind of experience.
That's interesting, because what we are seeing in Indonesia is that we are seeing actually the more experienced investors in the market now, because they will have a higher chance of getting the funding, not only in the seed, but also Series A.
Very interesting, different.
Yes. Now let's go to Southeast Asia. Chris, what do you see?
Sure. Like consistently with the other panel members, the world has changed. We see that. I find, if you look at a macro level, which you need to, the world has changed. There's crises going on in other parts of the world, but at the same time, I always tell people, if I look at this region, if you didn't know what was happening across the world, and I speak in my portfolios very often, the fundamentals are still very strong. Now, there might be a lag effect from other factors, but just the underlying macro conditions, I still find that Southeast Asia very strong, which I'm very optimistic about. But in terms of the startups and our portfolios, yes, they're a bit later stage, but it is a different market in terms of funding. My portfolio does have some profitable companies, but we do have a good amount of companies that are not making profits yet. So cash burn is a significant topic. It's probably the top topic that we discuss. And weathering the storm, I think, is the right way to put it. We're in a storm. We don't know when it's going to end. It will end at some point. It'll get better. The clouds will go away. But I think it's hard to confidently say when that will happen. So when we're amidst the storm, I think it's important to make sure that we survive. So that's kind of the discussions I'm having. Again, I'm very optimistic about Southeast Asia, Indonesia, and all the other countries. But again, we're not in an environment where external funding will be easy, say, similar to the past 2-3 years.
Thank you. So when we discuss about weathering the storm, I would like to maybe discuss the extreme bullish and the bearish case first, right? So maybe starting with you, Chris, what is one of your biggest worries about this period that we are going through? Because it's a very, very unique. We have geopolitical tension. We have the economy recession as well. So what is your biggest worry, and what is the key metrics that you are following to see whether we are going to the right direction or not?
Sure. Again, Southeast Asia up to date has been fine. I don't see too many worrying signs. But I would say the biggest worry I have is the fundamentals of the economies, which have been the tailwinds, the underlying tailwinds of this region, start to sway. I don't see that yet, but that would be my biggest worry. And again, the uncertainty of how long this will last. Southeast Asia, it grows faster or slower, but there's always growth. But growth is an underlying, so GDP growth, these fundamental metrics I look at, and again, because I don't know how long this will last and what the overspill would be from other regions, I speak in my portfolios all the time on focusing on, yes, there's many things to do. You guys are very exciting and hungry, but for me, I just want to make sure that you survive and last through the storm. So again, optimistic, but very careful is how I would put it.
Prashant?
Jeffrey, it's a very interconnected world, right? So while quarter on quarter, the Indian economy grew by 13%. So it was the highest globally. But that said, I think the macroeconomic challenges, I think, are still very real. Inflation is real, even in India. Supply chain problems are real. The ability to weather climate-related challenges is also real. So I think this is the first time I'm seeing a lot of global challenges adding up to the environment kind of feeling that something is not right, rather than the macroeconomic situation, like even Chris said, within the region. So this interconnectedness is the biggest risk and the challenge that I see. And you add to that the US, the period, I think Andrew may comment on this, the period that it's going to take for inflation to really is just unknown, right? And if that's 9 months or 12 months or 18 months, I think we are okay. But if that uncertainty on inflation numbers correcting in the US is more like 24 months, then there is fatigue all around, fatigue in terms of, when will this end? So the fatigue and the uncertainty from the overall macroeconomic interconnectedness is what worries me.
So you're looking also closely at the global macroeconomic indicators?
Yes, yeah, and supply chain being one. So things are not good in China because of weather and COVID and so on and so forth. And if you're a company that is in any way related to products or stuff from China, it's prices are just going up. How do you weather the storm and build a profitable company when your input costs are constantly rising?
Okay. Andrew?
Yeah, so my biggest concern, right, your question is what's our biggest worry, is that the storm lasts longer than it should, right? I think to provide a little context, right, post-pandemic, when we had a very dovish central bank position, we were in a strange world where all news was good news from a market's perspective, right? If there were market challenges, if unemployment was high, that was good news because it was a license for the Fed to keep interest rates at zero. And then good news was still good news, right? We're now actually in a world where all news is bad news. So if there's bad news in the markets, then there's bad news in the markets, right? But if there's good news, right, so if there's a strong read on employment numbers or if there's a bounce in the public markets, that becomes a license for the Fed to continue increasing rates. And we've historically had a fairly stubborn Fed, at least in the US, right, reluctant to change their posture, which is partly why we're in this situation to begin with. And I just worry that that posture will stay hawkish for too long and cause a die-out of certain private companies that really deserve a chance to survive, but they have maybe 10 months of runway right now or 12 months of runway right now, and the markets just don't quite recover in time for those companies to, you know, achieve their next round of financing. And so I just worry that this storm lasts longer than it needs to. So that's kind of my biggest worry heading into this market.
Great, thank you. From our side, we are closely watching because I think what has happened in the past 1 to 2 years, actually in the past 1 year, there are a couple of the unicorns actually listed in the Southeast Asia market. We are really closely watching that because they are, you know, some of the benchmark that we will always use to understand about the health indicator of the digital economy as a whole in the region, right? Now on the flip side, what are you most optimistic about? Maybe Andrew.
Yeah, sure. Well, I'll provide an asterisk to what I just said. The only news that would really be good news for markets is a low read on inflation, right? So that's probably the one piece of news that would be good for markets. And I think that is starting to happen. We are starting to see a little bit of abatement on inflation. It's going to take a while to show up in the numbers, and those are the numbers that the central banks use. So it's going to take a little while to flow through the system. But if you kind of look at what's actually happening on the ground, you know, some of the crazy inflationary bubble environment that we're in has abated. So that's positive. I also think from an opportunities perspective, you know, the strongest companies tend to actually do well, capture market share, and consolidate their position of strength in tough times, right? So the boom times, like the bull runs, can be some of the most challenging times for the strongest companies because their competitors get plenty of funding, et cetera, et cetera. And the bear markets can be where the strong companies really thrive. So I'm optimistic about that as well.
Chris?
I think it's similar, but again, I've been meeting many founders since I joined SoftBank in the region. I think this market condition, like Andrew was saying, it'll kind of divide or distinguish the better founders and companies in the region. If you have a lot of money in the bank account and everyone else has, it's hard to distinguish. But in this type of market, I think the winners will be, they'll gain a lot of distance against their competitors. And I'm later stage. I'm just waiting because I see a lot of talent in the region. The companies are going from C to A, B very fast. When I first joined SoftBank, there was only a handful of unicorns in the region. Now there's dozens. Again, I see the talent and the kind of, I always call it there's a lot of bubbling across the region, especially Indonesia, that I don't think that has changed. And I think that the winners will distinguish themselves even. And then I think it's a good opportunity for companies to really think hard about their business models, how to survive, and not just rely on external funding. So I'm very optimistic in that way.
Chris, very exciting times for this region, right? So that's the biggest. So the India-Indo corridor is, I think, the new innovation pipeline. And there's a lot of synergy between the way I see entrepreneurship evolving between India and Indo, and also the types of innovation that have already happened to some extent in the West or in China are still to be done here. So in B2B and some of these areas. So this is a period where I think maybe not the very capital intensive innovation, but the less capital intensive innovation will happen and flourish in this region. So very excited that I think it's a big opportunity to build a lot of interesting tech companies in this region with this close collaboration between India and Indo.
Thank you. A lot of you have been in the industry. Your firm has been in the industry for decades, right? And what we are experiencing in the past few years is pretty extreme. Last year, valuation was off the chart. Now we are seeing a lot of corrections. When we talk about learnings, any learnings that you actually find from this period? Maybe Prashant?
I think, there are three important markers that I encourage my companies to look at. And I think those markers have become even more important. One, where are you in your product fit journey, right? Where are you in your unit economics journey? And where are you in your ability to fund your marketing from internal accrual, right? All these three markers, I think now, we always told our entrepreneurs about it, but they ignored them, right? So now, if you tell them about it, they seem to, want to, learn, okay, fine, how do I kind of manage these three markers? How do I balance these three markers? How do I sequence them? How do I, which ones do I prioritize based on where my business is? So it's about them being more deliberate in their planning of their journey for the next, which they would, it's like fly by seat versus, being a bit more, thoughtful. So I think entrepreneurs are getting more thoughtful. And I think as investors, if we can use this opportunity to guide them on the right metrics, on the right markers, like I said, it's a great. And also, a lot of us here have invested in the memory of the organizational memory for a lot of us is decades. So we should use this opportunity to actually tell the founders that, you know what, this is what was done previously in the downturns that happened. And you know what, this maybe some of that is applicable now. And if you give them that historical perspective and historical context, I think they again get a little bit more real in understanding some of it. And finally, this is the biggest thing that I push, which is, can you moderate your people costs? And the way you moderate your people costs is by picking the key employees who want to be with you in these tough times and are willing to make the sacrifices with you in these tough times. And the sacrifice will be not to give up a lot of cash, but to trade stock for cash. And if you can take the most expensive employees and get them to trade, it percolates all the way down, right? So what I've encouraged a lot of my companies to do is, put a cap on what would be the most expensive paid person, including you as the CEO or the founder, right? And then, because you need to continue to build good tech, you need to be able to continue to get that, the right marketing levers to work. So you can't do without your best people, but you want to be able to have people who are willing to, and this has worked for us in a few previous cycles. So I think, make sure that you the best people self-select themselves in the company and who are willing to, ride this storm and are willing to sacrifice for tomorrow, where they will make a lot more if they're able to ride this journey.
Yeah, great point. And just to follow up also on that, sharing and telling the founders on focusing on the unit economics. I think it's of course all of us do, but it's not easy to do it last year where everyone is super excited focusing on growth, right? Yeah. Chris, how about you? What's the learnings?
Sure. So I think it's an evolution for any company over time. What I learned, especially through the past, 18 months, is to look at how managements are flexible. Things change. Investors, their appetites change as well. So, and market conditions continuously change. Those things are hard to control for the founders themselves and the businesses. But I think we're looking more and more at how founders and management teams are able to focus on the really important things. If you have a lot of capital, if markets are good, you can focus on many areas, sectors, new countries, new products, services. But in times like this, I think it's much more important to focus on the core parts of the business versus the nice-to-haves and the perhaps more shinier new things that you might pursue in a bull market. And I always find management teams and companies that are nimble and flexible in these types of times, and especially those that do it with conviction. They see things are changing, and rather than waiting too long or being wishy-washy, they go and they cut costs. They discontinue operations that were, again, perhaps nice-to-haves. And I think that'll be a much more important trait. And it's always been an important trait, but it's kind of disguised in good times. So we're looking more in that.
Great. Andrew?
Yeah, so I very strongly agree with Chris and Prashant on their answers. I think that makes a lot of sense. I think they gave good sort of broad answers. I'll give one sort of very narrow, specific lesson from the last 18 months. And that has to do with fundraising. And this is a lesson I see founders relearn once or twice every market cycle. And that is when you're going out for a fundraise, especially in a bull market, there are really only two scenarios that make sense. One, you raise from a really strong partner at a reasonable valuation. Therefore, you've de-risked your future fundraising. Even if the markets change, you're at a reasonable valuation and you can probably raise your next round. Or two, you optimize for valuation. I don't usually recommend this path, but some founders optimize for valuation. And if you choose that path, you fully finance the business all the way through profitability. Right? Those are the only two financing strategies that make sense when you're in a market like we had last year. And there were a lot of companies that went out and raised at very high valuations, but did not raise enough capital to fully finance their company through break even. And those are the companies that are going to struggle with fundraising in an environment like the one we're in now, where they're still sitting on a very high post-money valuation from their last round, but they need to raise more capital in a tough market environment. And I think that scenario was avoidable if you had approached the fundraise, in the bull market with one of the two strategies that I outlined. And I share that because it's a lesson that I see founders have to relearn once or twice every market cycle, because the appeal of low dilution and a high valuation, and you see what your equity is worth on paper and it looks like a lot. That appeal is very strong, right? But it's not the best long-term strategy.
Great. If I can share a bit on what we learned in Alpha JWC and also specifically for Indonesia market. We actually learned from India market, Southeast Asia, global market, US market, right? We used to say this company, the X of Indonesia, Y of Indonesia, Z of Indonesia, by taking some of the successful companies globally as an example. But we also learned that maybe that we need to rethink about that, because not all of them is actually applicable to the Indonesian market, right? So maybe in the future, taking the learnings from the global comparisons need to be rethink carefully again, because of the differences and the dynamics between Indonesia market, Southeast Asia market, and the global market.
I think it's a very good point. We had the same problem when we were doing the X of China, and so maybe China was 5 years ahead of India, and so it was always we were looking to China. And later we realized you kind of peel the onion and you look in the dynamics of what made a company work there are not the same dynamics that exist in India. And while we invest in Indonesia, we'll keep that in mind.
Yeah, exactly. Like last year we say, okay, this is the X of Indonesia, right? Now this year we cannot use that company as a comparison anymore because a lot of things has changed. So that's interesting learnings. Now let's talk about your fund's strategy, where you see opportunity, any different in plan or strategy that you're deploying to weather the storm. Maybe Chris?
Sure. So Vision Fund, I think from Fund 1, we initially had many large bets, billion-dollar bets, multi-billion-dollar bets. That has evolved. Fund 2, the average check sizes are much smaller. They are still large, but I would say that they've declined by a good margin. We've diversified in many ways the sheer number of companies in Fund 2, which is half the size. In terms of number of companies, more than double Fund 1. I think that will continue in this environment. The check sizes, we have the flexibility to do multi-billion dollars, but at the same time, I'm looking at smaller companies, which I think is a better way in this market to diversify and just manage our risk. In terms of, and if I can go down, that widens the reach within Southeast Asia. Before, it was hard to look at other companies outside of Indonesia, say, and Singapore, just because there's a lot of regional companies there. I think, although we've been monitoring other countries, it helps us have flexibility to actually start really deploying in other countries as well, which I think is a good way to manage our risk.
Traditionally, we have been a seed investor. About 90% of our investments have always been seed. I think we expect to continue that, 1 to 3, 1 to 4 million. We also have a very interesting pre-seed program now called Atoms. We want to bring a lot of that Atoms learning into this region where we not only help them, in their, learnings from what's happened with some of our more senior entrepreneurs. So we tag a mentor entrepreneur from one of the other more advanced companies. And this is a 3-month cohort. So we expect to do more of the Atoms in this region. In terms of sectors, we believe that consumer sectors have been a little bit played out across the region. And I think US went through that consumer not finding as many new consumer companies as you would like to find. So B2B is something that we'll continue to work on, both enterprise tech and India B2B or B2B here in Indonesia. I think there's a lot of supply chain, demand chain, inefficiencies that are not found in the West but are real here, and we're very excited about building them. Also building businesses cross-border. I think from Indonesia we have had good examples in the agri-tech space, like in fisheries. I think that's applicable to many industries. So we are looking at building collaborative cross-border companies for the region with the West. And that's kind of the new thesis we are trying to work out. Can you have an Indian company collaborate with a company in Indonesia and then work with Western demand or a global demand model, right? That's a thesis we are trying to play out. Enterprise tech, SaaS. SaaS has been an extremely interesting area for us in India. We have now close to, the new term is centaurs, companies with really 100 million revenue, true 100 million revenue. There are about more than 10 SaaS companies in India built over just the last 5 to 6 years with 100 million plus revenue. So there's something dramatically happening in terms of the shifting of SaaS innovation from the valley to this part of the world. Hoping a little bit of that will get broad-based here in Singapore and in Indonesia, but till then we'll continue to look at SaaS in India and in this region. And then finally, climate tech. So we are starting to see a lot of climate tech opportunities again emerge from the region here, but with global applications and global demand. So some of them may be SaaS, some of them may be marketplaces, but good opportunities in climate tech. So B2B, enterprise tech, and climate tech.
Andrew, since you're focused mostly deploying the capital in the US, but also looking at Southeast Asia, if you can share a bit your plan and strategy both in the US market and how is it different when you look at the Southeast Asia market?
Yeah, I would say in this type of market environment, maybe this is counterintuitive, but our core strategy actually changes the least in this type of environment. It's really that we kind of focus on the basics of traditional venture investings. We want to back the best teams with the most exciting, market opportunities and technologies. And because we're in, somewhat of a constrained environment, we actually are in the fortunate position of being able to do that with a little bit less competition maybe than a year ago. I think we're also in a fortunate position as a fund, having just closed on a large pool of capital. We have a lot of dry powder ready to invest. And so from a vintage standpoint, I think that, that tends to work out really nicely. In terms of the US regions versus Southeast Asia region for us, I would say traditionally we are core venture stage investors. Given the size of our fund, we're able to kind of back our companies all the way through, but we tend to start relationships with founders with investments quite early. So we do a lot of seed, we do a lot of Series A, we do a good amount of Series B. But in regions where we don't have boots on the ground, so looking at Southeast Asia, for example, we likely shift a little bit later stage, right? So maybe we're doing more Series B, Series C, Series D in markets like this, because the value proposition that we offer to companies in a region like Southeast Asia is more about accessing capital markets, getting public, right? These are things that are a little bit more relevant to a late-stage company. Whereas in the US, because we have boots on the ground, we can be helpful with things like talent introductions and kind of building the business from a much earlier stage. So I would say our core strategy actually doesn't change that much in this kind of a market environment. There are new opportunities that we're excited about, so the Southeast Asia region is a great example of that. I think we're excited to be deploying capital here. Prashant highlighted climate tech. That's another great category that we're very excited about. So there are always things that are kind of on the bleeding edge of exciting new opportunities, whether that's sectors or geographies. But in an environment like this, our core venture strategy of backing the best teams with the best companies and being really good long-term partners, that actually changes the least.
So we can expect to see you writing more checks in the region soon, yeah?
I think it's a function of the companies we meet, but I've met some really awesome companies on my time here, so
just to follow up on that, because among the three of you, you're the newest fund that's investing in this region. If you can share a bit on, ideally in about a year or 2 years, how many companies, any amount, target amount that you're thinking to deploy in this region?
Yeah, it's a great question. So we don't have any hard and fixed allocation that we have to deploy here. It's going to be responsive based on the companies we meet. But if you think about the size of the funds that we have, right? If we decide to run even a 1% of our fund experiment or a 2% of our fund experiment in the region, that's $100, $200 million of equity capital investment into the region. And I think that type of percentage is a reasonable expectation for us over the next couple of years. We've already been really lucky to partner with some great entrepreneurs. So we recently led an investment in Super, Aplikasi Super, which we're very excited about, social commerce company servicing tier 2, 3, 4 regions throughout Indonesia. And we would be thrilled to meet more founders of that caliber and more companies of that caliber.
Awesome. So I have one question that I think a lot of us is thinking about on how the investors are advising the founders currently, especially on balancing between growth and runway or survival, right? So let's say there's two scenarios and you're advising your portfolio companies. Option A is keep growing, top line keep growing, but it will make the runway to be 12 months. That's option A. Versus B, yeah, we don't care about the growth in the short term. Maybe the GMV or the top line will decline in the first 1 or 2 quarters, but we can extend the runway by 24 months. How would you advise your company, Prashant?
So we see two scenarios there in this sub-scenario. One is where there is a product market fit or not, is where we try to evaluate. Because if there is a product market fit, even if you have a 12, 18 month kind of window, we are still optimistic that there is enough capital in the market that you will get funded, right? But if you are still struggling with product fit, then it doesn't matter, right? So you better get your GMV to wherever you have to get it to, because every additional dollar you're going to get as GMV is not going to be counted, right? So so this is a period where I think the whole reset of the GMV thought process is important anyways, right? How did you achieve the GMV that you achieved last year, right? How much of that GMV is going to be valuable in this current environment, the way investors are looking at? And I think a lot of the responsive companies have cut that GMV by about 30–40%, and I think rightfully so. The other important thing to look at is, can you cut GMV? I think Andrew spoke about it, and Chris also spoke about it. What is your core GMV? I think companies added a lot of fluff in terms of the types of revenues, and a lot of that GMV is not GMV that they knew was going to be important strategically for the next 5–10 years, but it was important for their fundraise in that year or in that month, right, in that week. So I think reassessing, getting them to reassess the core of part of the GMV is more important. And if they reassess that, then actually the GMV that the customers value is probably not going to decline. The other GMV did not matter anyway in the first place, right? So some of these things you can get more nuanced discussions to help them make this decision.
So fundamental of the product market fit of the GMV and not GMV are all equal, right? There's certain GMV that's more important than the other GMV. Great point. Chris?
It's a very relevant discussion for all the board meetings I'm having recently. Growth versus cash runway. Upon your two scenarios, which it's a balance. It's hard to grow faster and be more profitable. So given that it's a balance. I think, again, we don't know how long this will last. So in my discussions, I think extending runway is the most important. I ask my companies, I would want to see at least 2 years of runway. I'm not saying the markets will be shut for 2 years, but we don't know. I'd rather be in 2 years sitting on a lot more cash than we need than in 2 years we don't. The markets are still shut. So I think, so I won't name the name, but one company we had a board discussion. Again, we're later stage, so we're preparing for an IPO. The markets, we were being guided that it would be a revenue-based multiple. It was all focused on revenue growth up till this year. Now, we took a closer look at the revenues. Some revenues, like Prashant was saying, is not core. Some are quite low margin. But we did it because our company would have been valued based on revenues. Now, I think that is changing. Profitability is not just a tagline, but very actually important in terms of valuation, sustainability of the business. So we decided we're going to taper down growth. Let's remove these types of revenues. Let's clean it up. And the margins go up as a result. And it's a more sustainable company. Cash runway is longer. So again, markets might change again, but we don't know. And given that we don't know, I think I'm focused at least on cash runway.
Andrew?
Yeah, I agree. This is a great question, and it's a very important topic at board conversations right now. And it's a conversation we're having probably at most board meetings. I strongly agree with Prashant that the first thing you have to ask yourself when making this decision is, do we have product market fit? Right? If we don't have product market fit in an environment like this, you're probably very, very hard pressed to find a good reason to reduce your runway down to 12 months. If you do have product market fit, then I think there are a couple options open to you. Right? If you do have product market fit, you can take the aggressive strategy of keeping a tighter runway, right? So in your example, 12 months, but shooting for more growth. Or you can still choose to be conservative and shoot for 24 months of runway, maybe with a little bit less growth. So you have more options available. And the way I would, the lens through which I would view that decision is really around the support you have from your existing investors. So how much risk is there in financing the company if the window stays shut, right? And if you have existing investors who you know will extend your last round, or they have allocation that they've reserved for your company, maybe it's at a flat valuation or a slight uptick, then you can afford to be a little bit more aggressive and pull your runway into 12 months to do things like capture market share and launch new product and features when your competitors aren't, right? And that can help you pull ahead of the pack. But if you don't have that luxury, right? So if your next financing round is not necessarily de-risked because you're going to have to go look for fresh investors and new capital and new firms, then I strongly would advise towards the 24-month plus of runway scenario. Now, it is possible to be too conservative. So without naming the company, I have a portfolio company with over 8 years of runway right now, and they're in a very strong position. I would say they have product market fit. I think they can afford to pull that in a little bit without adding any real risk to the business. But I like the way you framed it, at 12 months versus 24 months, because that probably is the most relevant decision point and time frame for most companies. Since we have a couple minutes, I'll add one point to this. And that is, if you look at public market valuation multiples over the past 2 years, there's actually been a shift in how multiples are being applied in the past couple quarters. Right? So throughout all of 2021, SaaS multiples were much more highly correlated to growth and revenue than to profitability and revenue, right? So the R squared on growth for SaaS multiple, if you just did a regression of growth versus revenue multiple, was somewhere around 0.5, 0.6, right? And the R squared for profitability plus growth against revenue multiple was somewhere around 0.2. That has actually flipped. Right, so now valuation multiples are more correlated to profitability plus growth than just growth alone. Right, so the R squared is now actually about 0.55 for growth plus profitability, and it's like 0.3 for just growth alone. And so that tells you that public market investors are really starting to value companies based not only on how quickly they're growing, but how profitable they are.
Great, and I think you brought a very interesting point about aligning with your investors, knowing whether they will back you or not, because I think in this current situation we are seeing different stories, hearing different stories on how the different investors advise and also behave on when it comes to a tough discussion like this. Yeah. Last question, perhaps on exits. I think it's also important to cover the exits. Maybe Andrew, what are you seeing in the exits? Do you think that in this current market situation, how should we think about exit?
Yeah, it's a great question, and it's a very relevant question right now, because we are not seeing the IPO window open in the US. So over the past week, there were essentially no venture-backed IPOs. And if you look at the numbers, there's been a precipitous drop in the number of companies that have been able to get public, right, over the last 2 quarters, relative to the rate at which companies were getting public in 2021, for example, which granted was uniquely high. But I think we're actually now in a period where the IPO window is sort of uniquely low. That may not be the case everywhere, but I would say in the US, companies are opting more to stay private. There are quite a few companies that had plans to go public this year that have deferred their expected IPO dates into next year or even indefinitely. And they're good companies, right? They're companies that are at a scale that is sufficient to be public at strong market caps, but they're opting to go public later.
Chris?
Very similar. I mean, I think 3 of my portfolios this year were, they had their prospectus drafted, they're about to go out, they pulled, and they're delaying to hopefully next year. But again, these things are not under our control or no one's control. So I think it's a good time to, because if we look at the prospective drafts that we had, a lot of it was focused on metrics probably in the past of revenue, GMV, which our view was that was how public investors looked more. And I think to Andrew's point, the metrics have changed, and thus the companies have some time to change what to focus on, to prepare themselves better. So we're using this time in terms of exits. I don't have a window. I don't think anyone can confidently say they know when they can go out, but you need to focus on, again, cash runway until the window's open, and in the meantime, focus on things that will increase the value of the company. What is more relevant than not? And again, the markets have changed, so you can't have the same strategy and focus. And that's what we're doing right now, real time.
Prashant.
Just a little bit going back to the last point, there was one interesting angle that we are exploring with all our companies, which is consolidation, right? This is a great time for companies to kind of take a step back and see, is their offering complete? Is there a room to come together with another company and synergistically build more profitable business, reduce competition in the market, and so on. So I think as board members, we should encourage them, not force anything, but I think entrepreneurs are also open now to think about that. Now coming to exits, India's stock markets have not corrected that much, so to Andrew's point, I think if you are a profitable company growing moderately, I think the multiples are very good for tech companies. You could get 40 to 50 times your profits, and also even if you are just break even with a path to profitability, I think the appetite for these companies are really great. So we are preparing about 6, 7 of our companies for listing in the next 6 to 9 months. And, so the Indian ecosystem has been drawing venture capital for the last decade. So it's very important for us to be able to demonstrate that we are able to return profitable money, right? So otherwise, the ecosystem is kind of one way, right? So LPs don't like it. And so it's very important for maybe Indonesia is still early. Maybe that situation is in the next 3-4 years. But for India, we have to have some great IPOs in the next 12 months and demonstrate that we have a virtuous cycle of drawing money and returning money.
Amazing. So thanks a lot for the insights. I think, of course, we all know that this is not an easy time for us. And the next 1 to 3 years is not going to be straightforward as well. But I think in the past one hour, we hear a lot of insights, learnings from some of the most successful funds globally. I think, of course, there's certain concerns, challenges that we have to face, but it's not all doom and gloom. There's also a lot of opportunities that we are excited about. So thanks a lot for the 3 very distinguished panelists, and especially since they're coming from a long way. Chris is coming from Singapore, Prashant from India, and Andrew is all the way from US. We are really, really fortunate to have all the great panelists and great discussion. I hope this session is really, really useful for you. And let's stay in touch. And if there's anything, feel free to reach out to the panelists as well. They are going to be more active in Southeast Asia. I'm sure you will see them more often in the future. Thank you so much.
Thank you, Chris. Enjoy the panel.
Thank you.
Thank you very much to Mr. Joe and our panelists. We kindly ask to remain on stage for a group photo and for the photographers to take their photos now. Thank you very much. kindly be seated. Thank you. And we are now ready to begin the last session of this discussion with the focus on learning from unicorns during time of challenges. Sarah, we have our panelists.
Yes, we do, Ralph. And ladies and gentlemen, for our next session, our panelists are Mr. Rizky Kamadibrata, President of Grab Indonesia, Mr. Anderson Sumarli, CEO of Ajaib, and Mr. Aaron Tan, CEO of Karo.
And our moderator for this session, Mr. Joji Philip, founder and editor-in-chief, Deal Street Asia. Mr. Philip is the founder and editor-in-chief at Deal Street Asia, the most significant deal news and intelligence platform in Southeast Asia. Without further ado, ladies and gentlemen, please give a big round of applause and welcome our moderator and our panelists.
Good morning, everyone. Thank you for staying on for the last session. We have about just under an hour, so let's maximize it. You heard from some of the top investors, and this session we're going to be hearing from founders and top executives who are running some of the biggest startups in Indonesia and Southeast Asia. The topic that we have for this morning is trolling in the pandemic, learnings from unicorns during the time of challenges. But before we start, I just want to ask all our three panelists, maybe just take less than a minute each, introduce yourselves and your respective companies for our audience. Aaron, I'll start with you.
Yeah, my name is Aaron, founder and CEO of Karo. We are basically, a marketplace for cars. Think of us as, a transparent marketplace where you can buy and sell cars online, right? So if you ever need to buy or sell a car, please come to us and we'll just, we can get on for the rest of the day. We'll discuss what we do. But again, thanks for having me this morning.
Hey, good morning, everybody. I'm Anderson, co-founder and CEO of Ajaib. We're a consumer fintech in Indonesia where we help people save and invest across stocks, crypto, mutual funds, and others. We run across 3 lines of business in capital markets, crypto, and banking.
Hi, good morning, everyone, Joji and fellow panelists. My name is Rizky. I am the president of Grab Indonesia. Grab is considered as a super app. We provide, ranges of services from ride-hailing, deliveries, food deliveries, smart deliveries, and the high chance that if you're in Bali, you will use our service. So if not, please try on. We are also the enablers of economic empowerment in Indonesia because we are the home of millions of MSMEs.
Thank you all the panelists for the introductions. I'm sure for our audience, when it comes to these 3 these 3 companies, everybody knows you, and I think everybody's used your services too. I want to set the context for the discussion. I want to start with a round of questions on the pandemic bounds, Is it sustainable and what comes next? So let me start with you, Aaron. So at Karo, the pandemic was a period of rapid growth. I was reading somewhere that, you saw some 2.5x growth. Your total gross merchandising value crossed 2 billion. And business is booming at Genie, your fully owned financing platform. So I wanted to ask you, what is next for Karo? Is it that you will go to a full-fledged platform play, like, offer everything from marketplace, financing, rental, repairs, after sales? Is that your next step?
Yeah, so for us, I think this year, as is right now, so last year we closed the financial year with about 2.5 times growth year on year. I think this year, right now, run rate wise, we are already just above 2x growth year on year. So you're absolutely right in the sense that post-pandemic, we are seeing a boom in business. And we like to think it's sustainable because the truth is that in our business, in our industry itself, there's a lot of tailwind, right? Be it electric vehicles, be it, the very fact that new car sales is still pretty much challenged, right, due to various reasons. There's export restrictions, issues, whatever not. So we like to think that there's still a lot of tailwind moving forward, right, at this point in time. But what's next for us is very simplistic. We will just continue to integrate deeper into whatever we do, right? So today, more than just selling and buying cars, if you ever buy a vehicle from us or even sell a car to us, more often than not, we have an 88%, 90% attachment rates to things like insurance, even like financial services, things like lending itself. Not only do we sell the cars to you, we tend to now these days underwrite the insurance ourselves because we are oftentimes the licensed insurer, or we are also the licensed lender on record, right? So for us, we'll go deeper into all these things. And for us, I think what is more interesting is how do we improve the customer's experience? How do we, assimilate more information, more data, so that we can make the selling and buying experience more seamless for our customers across more markets. So I think this year for us, there's a lot of strategic push to be more productive, right? As the previous panel said, there's a lot of these issues with profitabilities and stuff and whatnot. And I must say this, last year we were very lucky. We posted our first year of being profitable. We've been 3 years ago, we have been EBITDA positive. So as a company, I think generally we are in good shape. But at the same time, again, I was just talking with Anderson off the shit just now that for us, a lot of what we plan to do this year is to also grow, right? Because the way we look at life is, yes, Indonesia, Thailand, Malaysia, Singapore, we are pretty dominant, and in a lot of these markets, we are fairly sizable. But nothing is stopping us, especially in this pandemic, in this post-pandemic recovery situation, into going to other markets. And we just entered Japan and Taiwan, actually just this quarter. So I think moving forward, a lot more market expansions is expected.
Interesting points, especially in terms of going deeper, improving the customer experience. And I guess you're among the few companies in Southeast Asia expanding to geographies outside this region. Anderson, let me come to you. Ajaib had one of the most, a period of the most rapid growth during the pandemic. And the number of, but in terms of the prospects, do you think it's still very early days for both Ajaib and the overall Indonesian market? Because when you look at the number of stock traders in Indonesia, it's still under 10 million, which is less than 4% of the population, compared to, say, for Singapore, it's 26%. So just take our audience through the prospects that you see going forward.
Thank you so much, Joji. So certainly I do think that we're in the early days here. When we first started Ajaib, there was only 1% stock investor penetration in Indonesia. And Indonesia was the largest country of its size with that low of a stock investor penetration. So we knew it wouldn't sustain at the low percentage for long. But also interestingly, Indonesia is also the third largest unbanked population in the world, where half of us are unbanked. And coincidentally, Indonesia is also one of the largest middle class in the world. And what happens with rising middle class, as we've seen in China and India and other regions, is that they start paying attention to their financial futures. They start looking for access to banking services, to investment services, and also other services like car financing, home financing, insurance, and so forth. And so we think that kind of this revolution around financial services going into its modern digital age in Indonesia and other emerging markets are just very nascent.
Thanks, Anderson. Rizky, let me come to you. Grab, especially in its core business, which is ride-hailing, you didn't see that level of, obviously there was not that bounce during the pandemic, but your food delivery business took off. So in terms of what's next for Grab, is it launching new services, especially in countries like Indonesia? Is it focusing on fintech, or is it looking at the path to profitability?
Thanks, Joji. It's always interesting to talk about the pandemic effects, especially in this region, and to the businesses. And in particular to businesses like Grab that has multiple services. But before I start, let me go back to the missions that Grab carries. Grab actually empowers, we have a mission to empower people in Southeast Asia, including in Indonesia, to, through technology and digital services, to create better life for them. And then COVID definitely affecting many of the people. And going back to our missions, that through technology and our digital services, we're very focused to spur the recovery from the pandemic. And for that, definitely we need to work with the government, and we are working closely with the government on that. And the pandemic itself, as much as it's actually creating some negative impacts to many businesses, we see it actually creates opportunities. Opportunities for digital players, for even MSMEs, merchants, you name it. Also to unrelated business, the opportunities to tap into delivery services. And people are changing their behaviors, and definitely it's converging into a benefit to many of these players. And looking into this, definitely it's something that we tap into that opportunities. We definitely moving up in our delivery services. And it is actually benefiting to many people. And that also creates some other opportunities, like you mentioned. Let me mention one of those. It's our Grab Map services, for example, because it's becoming very, very crucial. And looking into the situations right now, we went public, obviously, last year, and the results, I mean, like so far this year has been quite encouraging. I will be cautiously optimistic while still focusing in the strategic objectives. But I will say that our assessment that the momentum for business is very good, and Grab is here to stay, and we are definitely looking forward to capture more opportunities. I mean, like the pandemic is easing right now, definitely, and we're looking forward to be here, serving the region, serving Indonesia's, not only for the next 1 year, but maybe, you know, hopefully 5, 10, and 50 years onward.
Interesting. And your last quarter results where, you know, Grab had a very interesting, good set of numbers.
Thank you.
Despite, which shows that there's no slowdown despite inflation and the other factors in this part of the world. Before we go into the next set of questions, just some data points on Indonesia overall. Its digital economy 5 years ago was only around 8 billion. Today, it's just under 50 billion. And it's estimated that Indonesia's digital economy will triple to just under 150 billion in the next 5 years. And this level of growth places Indonesia third globally, only behind China and India. So I just wanted to ask all the three panelists, what are the prospects, like when you look at these data points, right? What are the prospects for each of your companies in Indonesia? Aaron, I'll start with you.
Yeah, no, for me it's very straightforward, right? If you look at total addressable market for the four-wheeler space in general speaking, the penetration of vehicles across Indonesia is well under 10%. Yeah. So if you look at it from that standpoint, the more emerging, more developed markets, like say, for instance, the United States is closer to 80% per capita. Yeah. So 80% car penetration, or even in Europe, so you're talking about 50%, right? So there is a lot of opportunities. In fact, I was speaking with one of our investors who is a former minister in Indonesia, and he was saying that Indonesia, they're laying a lot more roads, right? You know, in the next few years, in fact, there's a lot, I think, a few thousand kilometers of roads being added on in Jakarta, outside of Jakarta, in the second, third tier, fourth tier cities. So, like it or not, sales will increase. And I think the other thing that we should look out for is also the very fact that the manufacturers, the OEMs, the EV manufacturers themselves, or even Toyota, Honda, Volvo, BMWs, whatever, the OEMs are moving towards being EV only, right? And that also means that there is a significant tailwind behind our business, especially in this part of the world, because people moving to electric vehicle means that they need to change and sell their former combustion engine only car. And at the same time, with this pent-up demand, plus the very fact that the market should be growing, it just means that, you know, we can see a lot more sales for vehicles across this region moving forward. But of course, that also means that Grab will also do well, because at the end of the day, we can coexist as a business, because the long and short of this is that people who need it from a point-to-point kind of solution will still need what they do, and people who need to travel longer distances, B2B, whatever not, will still probably need a vehicle. So I think that's how we look at life.
Thanks, Aaron. Anderson, what are the data points from Indonesia that excite you, apart from low number of people trading? Are you also excited about the fact that mutual funds is, you know, compared to other developed markets, not many people are investing in mutual funds in Indonesia?
Yeah, I think I agree with the point of view of Aaron. So one of the things with financial services is that when you see a country like Indonesia, where there's a lot of social, economic, upward mobility, the need for financial services and even more complex options is just going to increase. Like, I'll give you guys an example on Ajaib. 80% of our investors are outside of Jabodetabek, or meaning that majority of our investors are outside of tier 1 cities. So this is not a tier 1 problem or things like that. In fact, as folks in the rural areas start to increase in their socioeconomic levels, starts getting increase in wealth, they start thinking about these financial services products in which the infrastructure has not been built for the rural areas, because for a lot of the current financial institutions, it's way too expensive to reach these people in rural areas, and therefore this digital mobile native consumer fintech is the right solution to bridge towards it. So I think to me, across all financial services, Joji, be it investing, saving, or insurance, financing, lending, all these things are just going to pick up from here on out.
Rizky, what about Grab? What excites you about Indonesia?
Very, very exciting. We feel that we're very blessed actually to exist in this region, especially in Indonesia. I mean, you mentioned about the value of the technology. We see that the value of the digital ecosystem in Indonesia will more than double, I think, by 2030. We expect that it'll reach $300 billion US. That's actually more than double what the current Southeast Asia technology valuations at this moment. Of course, demographic-wise, also it's very exciting. Demographic-wise, we see young, mobile-savvy populations. Almost half of them are young, and then that accounts to almost 120 million population. Very, very exciting. Internet penetration as well, thanks to the pandemic, partly because of work from home, study from home. It's increased from 64% internet penetrations pre-pandemic to 77% post-pandemic, enabling technology players like us to presence in many areas in Indonesia. We see also, I'm interested with Anderson's statement about Tier 2 and Tier 3. I couldn't agree more. The growth of Tier 2 and Tier 3 cities in Indonesia outpacing the growth of the first-tier city in Indonesia. Its share of the GDP will increase by 3 to 5% by 2030. That's actually evaluations of about 77 billion, so exciting numbers to be with. And then because of our natures of serving MSMEs, this is definitely a play that we would like to be in participations with, and then being part of the development of MSMEs in Tier 2 and Tier 3 cities. We see also investment in the technology that is pouring to the regions of Indonesia in a very fast pace as well. And with that, though, it comes with challenges. I think one of the main challenges is talent pool. I'm sure both of you also facing the same issue as well. We're trying to address this as well. We're building our tech centers headquarters in Indonesia. We're focusing on MSMEs technology development, mapping technology as well. We're sure that with the focus in developing talent and technology in Indonesia, that could address the potentials that I was just talking about.
Yeah, I just want to dwell on some of these numbers again and look at it from a fintech angle. And in that context, Indonesia presents some very interesting numbers. Smartphone penetration is, like one of our panelists said, nearly 80%. But yet, the country has about 90 million people who don't have a bank account, which is the 4th largest in the world. Therefore, fintech is going forward, I'm assuming fintech will be a big play. And all of you have a pretty significant fintech play. So in that context, let me start with you, Aaron. First, wanted to ask you, you picked up stake in 2 Indonesian banks. Can you take our audience through the logic behind buying bank in Indonesia?
I mean, first of all, yes, we invested. We haven't bought the bank. I mean, in that sense. In fact, we did one of the banks with Grab. The long and short of this is that, from my standpoint as an online retailer for cars, in that sense, is that we constantly need access to financing, and so having access to a bank is useful from that standpoint. I think that's the first part of it, because you are able to, as a result, borrow, hopefully, at a lower cost of capital, so to speak. I think that's one part of it, honestly, a strong part of it. And the second part of this is that I do believe in the ecosystem story, right? So one of the many reasons why we invested in a bank, in this case Bank Alo, was mainly because the team, Pak Chate and folks were putting together a story whereby Grab, ourselves, and Alpha, Mart, and whatever not will come together to actually put the ecosystems together so that we have the largest offline and online sets of customers to actually go after the markets and stuff and whatnot. So generically, I think point number 2 was that having access as a group, as a network is also super interesting from my standpoint. And I would say the last part really is that I do genuinely believe that the Indonesians, from that standpoint, to your point, right, 90 million of them do not even have a digital bank account in that sense, is underserved, right? So, when there is a problem, we are always seeking for a solution. Right? Of course, there are many digital banks out there. I think the verdict is still not out on like who is winning, who is playing it correctly, who is doing it well, and who is winning it. I think it's still early to call, but I think I do agree with what I just spoke with Anderson downstairs, in fact, that there is a huge opportunity right now. And I also stand by the fact that I don't think any of the digital bank players have done it correctly at this point in time. A lot of opportunities. I think more interesting to hear from him.
But Aaron, I just have a quick follow-on question to you too. Rizky mentioned about the whole small and medium enterprises. And if you look at Southeast Asia, 67% of all businesses in Southeast Asia are small and medium enterprises. I think the number could be higher in Indonesia. Sorry, 97%. And they employ about 67% of the working population. How do you see this space, both in Indonesia and Southeast Asia?
So I love the space. In fact, just before this meeting, just before I flew into Bali, I had a long chat with my product folks about doing more around this. We call this the Uberization of agents in that sense, or salesmen, so to speak, right? We treat all salesmen like our salesmen in that sense. And in fact, I had a very long conversation yesterday with Andrew about the super investments and stuff. Long and short of this is that I think it's a great business. It's unique to it's not unique, but largely, predominantly present in Indonesia. But I did tell Andrew yesterday something that I'm also a little bit concerned about. I do think that it's very prevalent as a method of be it business or whatever not. The truth is that over time, as an economy gets more developed, right, as people get richer, whatever not, the roles of, we call it agents, micro-entrepreneurs will diminish, right? And so that's something that I think they should watch out for, and to ask themselves this question, which is, over time, right, say if inefficiencies gets wiped out, people are okay with buying things directly online, blah, 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 then the role of micro-entrepreneurs needs to be rethought of, rethink, so to speak, right? So I think, generally speaking, I think it's a critical component of businesses today, but I'm not less convinced that it is still going to be here, say 10, 20 years from now, whereby we are seeing this amount of micro-entrepreneurs. It's like everybody works for themselves, nobody really works for anybody in that sense.
Anderson, let me come to you. Again, I wanted to ask you about, Ajay invested about $100 million. You picked up a stake in a bank, Bank Bumi in Indonesia. For our audience, take us through the logic in investing in a bank. Is it to expand your customer base and offer more services than just, the trading things that on the app? What's the reason behind it?
Well, I think the intention for us on that move is no different than my fellow panelists here as well, right? I think at the end of the day, the reason why we started this company was because we wanted to create a big impact to the country and the region. And I couldn't think of any bigger impact worthwhile to pursue other than to touch the hearts of millions and millions of folks in their journey of socioeconomic upward mobility, who's trying to access financial services. And we've seen this happen in other emerging markets, in India, Brazil, China, that the financial services ecosystem and the backbone is so important to help people push upwards socioeconomic level-wise. For example, I think that right now people are thinking a lot about savings, but at some point, there's going to be this mass adoption around wealth management because now they have a bunch of money that they need to think how to manage. And then eventually also insurance, because now they have a lot of money that they need to think how to protect themselves from. So kind of the intention for us coming in is to be able to serve these customers across their seasonal needs for financial services as they develop higher and higher up in the socioeconomic chain.
I just have one more question for you, Anderson, and I'm sure everybody in the audience would also be interested in it. I want to know how you see the crypto space, especially in Indonesia. You offer crypto trading on the app, and if you look at numbers, the crypto trade, those who trade in crypto in Indonesia are 50% more than those who do the stock market trading. And it's a huge, huge base. How do you see it?
Yeah, crypto is very interesting. I think that the relationship for Indonesians with crypto and also for emerging markets folks with crypto is fundamentally very different than the relationship with folks in the developed markets, because unlike in places like the US or Europe, where people are learning about crypto well after they're invested into different financial instruments, in emerging markets like Indonesia, people are learning about crypto at the same time that they're learning about all these other financial instruments. And so it is such a natural thing for them to put in a well-diversified portfolio. And it just goes beyond the coin investment and things like that, because you see also that Indonesia has one of the highest adoption of NFTs per number of population in the world. Southeast Asia in general also has one of the highest adoption of play-to-earn games. I think that the underlying blockchain technology itself, it's still in its nascent days. I equate it as if we just discovered oil. And when we just discovered oil, we would have never have thought that it would create such an amazing boom in transportation, in being able to heat up buildings, being able to be used in production of food, in cleaning supplies, and even as a financial instrument to trade. And I think that kind of discovery process will also happen with blockchain-based technologies. And I'm just really excited that Indonesia and other emerging markets, the way that they have embraced and been more open towards these innovation may just be the cradle of the next innovative use case of blockchain.
Interesting. Rizky, let me come to you. One of the points that you mentioned earlier was, Grab is a super app. But within the super app, I just wanted to ask you about your fintech play. You have a majority stake in OVO. You offer buy now, pay later, loans, insurance, investment options. There's loyalty programs. You have a stake in Bank Pharma in Indonesia. You have digital banking permits in some countries. So where does fintech rank overall when you look at Grab's future?
Interesting you see it from the super apps because it's very much relevant. Fintech, to us, plays a central role to serve our missions, to enable marketplaces to serve everyday entrepreneurs to more than thriving. Because it is very important for them to overcome some of the challenges that they face on their daily basis. And then for us to enrich of our offerings in fintech, it's actually very crucial to strengthen our ecosystems. We learned from our ecosystems there are many use cases that fintech will play a crucial role in there. And please be mindful that our ecosystem, this will include, of course, users like most of you, but also our partners that includes driver partners, merchants partners, MSMEs that I mentioned before, marts, deliveries. They are part of our ecosystem. And then learning from our drivers, for example, driver partners, they have many occasions, or maybe I will say many incidents that will happen over the course of their serving our services. For example, they will need emergency funds for their family, or they need school fees, to pay school fees for their children, or if there's an accident to their vehicles, that they need to actually do immediate repairs for that. They could easily fall into for example, sharp loans, but then they will need a solutions for that. And fintech definitely is very crucial and important for us to serve. We have distributed cash loans to our driver partners, and there are thousands of them that are actively, not only utilizing but benefiting from it, and they've become an active borrowers as well. That's an example for our driver partners. But for merchants also, there are many, many, many examples, especially post the pandemic. Post-pandemic, many merchants are seeing a growth in their top line, in their revenues, especially coming from their online services. So that will trigger them to have needs for expansions, for example, and to fulfill their growing working capital as well. And then from this, of course, I think it makes sense. I mean, by being super apps and serving this ecosystem and being part of this, marketplaces, that we're able to serve fintech services that is relevant to them.
Just adding on to what you just said, big picture for economies to grow, a large part of it is driven by consumption. And all the fintech offerings that the three of you have, in the sense whether it's loans, insurance, buy now, pay later, or that. So do you think that fintech is leading to increased consumption in both Indonesia and Southeast Asia, or responsible for increased consumption?
It is actually, you will see it from the two angles. Of course, from the consumption part. I mean, definitely there's a need for consumption because people have their daily needs at the same time. But like I mentioned before, you will also see it from the other angle, from the supply perspective, from the ones that provide the services, because they are not from the consumption's part of it. They're actually part of the enablers and providing the services. So I think it's fintech definitely it's a positive side, and we need actually to see the countries are having a growth in that particular area, both for the consumption parts and both for the service level at the same time.
Yeah, got it. I want to spend maybe the next couple of minutes coming to our topic today was learnings from the pandemic. So just spend some more time in terms of learnings. Anderson, I'll start with you. Through the pandemic, everybody described you as the Robin Hood of Indonesia. But if you look at Robin Hood today, I think it's got a severe hangover from, or one of the worst hangovers from all the stock trading growth that happened during the pandemic. What are your learnings? And is there anything that you can learn from what happened to Robin Hood and you can do differently going forward?
Well, I think since the beginning, right, what we sought to build was actually Charles Schwab for this generation. Our mission statement at setting this company was to welcome a new generation to modern financial services. And today we run 3 lines of businesses in capital markets, crypto, and banking. So we kind of envision being able to offer young Indonesian millennials and Gen Zs access to their financial needs across the different seasonalities that they wanted in, and also across their whole life journeys. So I think that, that's the way that we view our relationship long-term wise with customers. But I think on top of that, what I also want to add is that, look, these are challenging times for a lot of people during the pandemic and right now, not just for the companies that you mentioned, but also for like small business owners, employees who were recently retrenched, even just like the common household that now needs to handle with higher inflation on their essential goods. And so the thing that I want to stress on right now is like it's time for resilience. And I think the more resilient company, the more resilient people are the ones that's really going to be able to thrive despite all the setbacks coming on. And so I think that is like the common theme that I see in like really great companies and people that I admire in this stage.
Sorry, but Anderson, just a follow-on question to that. As the pandemic winds down and more people step out, get back to their offices and all of that, and even in the West we have seen that the whole activity on stock trading on the apps comes down. Is that something that you're concerned about for Indonesia too?
Yeah, so investments as a category is super cyclical, right? And I think what's really important for founders and companies in this space is to understand the right things to do at every point of the cyclicality. So right now, I think is the best time to keep your head down and start building. I think that was speaking of learnings, one of the best things that we did in the onset of the pandemic, we said, hey guys, right now we need to be heads down and build, because when the bull run comes, you never know when it will come and how quickly it would swift. So I think that's one of the core things of, again, like great people that I admire right now. Being in the cyclical business is understanding what's the right thing to do at every point in time.
Aaron, let me come to you. What were your biggest learnings from the pandemic, and how did you manage to run a team, remotely, where you couldn't travel, where the team is spread across so many different countries?
Yeah, no, for us, it's quite simplistic, right? There's always a silver lining, something, the pandemic will come to an end. That's what we always think. And the pandemic actually taught us the importance of, making sure that processes are streamlined, more automated and stuff like that, and, get rid of all manual processes that you can imagine. I think that's one thing that we really, really learned the hard way. Fortunately, unfortunately, but I think after the pandemic, we really gotten a lot stronger internally, especially with regards to processes, automation, and even using data the right way so that we reduce the need for manpower or for that matter manual processes, right? But we operate a very large team. We have about 5,000 people across Indonesia, Thailand, Malaysia, Singapore, Vietnam, China, Japan now, and actually Taiwan. So about 8 countries. It's quite interesting, but I would say this, which is tough, but it's possible to do that through online meetings and stuff like that. But what I tend to do, and during the pandemic, what I remember doing distinctively, and even during June last year, or even earlier, I was actually in Indonesia a lot, right? So I found it, at the end of the day, while Singapore was under lockdown, the truth is that Thailand was probably a little bit more relaxed, and then Indonesia was somewhat okay before June last year. I think after July, it became a little bit more strict. But I think generically speaking, I've been traveling around the areas as well. So it didn't really impact my traveling as much as it should, but actually I have been traveling pretty much the whole of last year across the pandemic. So it didn't really quite affect us from that standpoint.
Interesting. I also want to ask you on your biggest challenges. Is it the risk, the embedded risk that comes with lending, or is it, ultra competition? Because when it comes to four-wheeler financing, a lot of unorganized players in the sector, which people normally go to. Or are you worried about other challenges like, inflation, rising fuel costs, which may prevent people from picking up a four-wheeler?
From a company standpoint, I dare say that the biggest challenge, and I do not know whether my panelists will agree, is it's not even growing the business. The truth is that for us to grow revenues and whatnot, honestly, it's easy. The hardest part in running out, at least in my business, I feel, is gross profit. And fundamentally how it hits to the bottom line and stuff and whatnot. Growing 10, 20%, 100% on revenues is far easier than trying to grow even 20% of your gross profit. It's a lot harder that way. So from that standpoint, if you ask me what has been the toughest thing about running this business, is less about the risk, the NPL. Our NPL rates are the lowest amongst what I've seen at least in the industry, 0.1% NPL, generally speaking, we don't really see that as issues. What we see is, which I feel, I wouldn't say challenges, but what I feel is really stupid is stupid competition, especially in certain markets like Malaysia, right? Whereby the competition will subsidize and whatnot to win the markets. And it doesn't reflect on their P&L because it hasn't occurred to them that they have to be profitable, right? I think that's where we see challenges whereby the competition is still throwing money stupidly, not understanding that the world has shifted from price to sales to now really price to EBITDA or price to PE in that sense. And for that matter, the importance of GP. I think that to me is the biggest challenge that we are seeing right now today, which is the competition hasn't seemed to wake up or understand what's happening in the market right now.
Rizky, let me come to you. For Grab, what were your biggest learnings from the pandemic, especially running a business in Indonesia, which is thousands and thousands of islands where you couldn't travel, and you have multiple different businesses, and you work with, again, thousands or tens of thousands of drivers and partners?
Yep. Very interesting questions, and I have an interesting answer as well. I mean, there's 2 lessons learned from Grab in Indonesia throughout the pandemic. The first answers has nothing to do with what we've been talking about. It's vaccinations. It's our biggest learning. Of course, for many of us, vaccinations right now, it's such a common term that we take it for granted. But imagine, Georgie, 2020. I mean, like that was October. The certainties of vaccination was not there yet. Even Indonesia was doubted whether we could deliver and making jabs to hundreds of millions of people. And you mentioned like across islands, we got a lot of doubts. And then looks what happens right now. It's becoming quite common. So we set our eyes focused in the later part of 2020, before even vaccinations came in, to make sure that vaccinations went smoothly. Not only for our partner drivers, it's actually hundreds of thousands of them, but also for the country itself, because it's actually a challenge to distribute vaccines and making sure people are vaccinated. Why it is very important? Because from our partners' drivers' perspective, they are in the daily basis, especially during the pandemic, they are in interactions of at least 14 people a day. 14 people a day. So they're actually at risk to being infected by COVID. So we needed to make sure that they are one of the first that getting the vaccinations. Initially, our drivers, partners was on phase 3. We did some socializations and making sure we're the partners, technology partners for the governments for vaccinations. And it was being speed up to phase 2. In fact, this is Nusa Dua, Bali, right? The first vaccination center by tech companies in cooperations with government of Indonesia was held in Nusa Dua, Bali. And we actually being appreciated by many Balinese because it's actually very important for them. That is our first lesson learned from the pandemic. And number 2, it's business related, definitely. We're so glad that we're ramping up our business outside of, transport, ride hailing. We used to be, known as only ride-hailing, technology company, but we're no longer like that right now. Definitely, that we're serving Grab Foods, Grab Marts, express deliveries, and that actually plays a very crucial part for our turnaround as well. And we're so glad that we made those decisions.
Before we have another 10 minutes, so I just want to touch upon an aspect that was discussed in the previous panel too. Initially, when the Southeast Asia Indonesian ecosystem grew, all of the companies were described as, the equivalent of, let's say, this company in the US or that company in China. You were like a lot of companies describe themselves as the Uber of Southeast Asia, or, that was the common phrase that we use. But along the way, all of you have built companies that have become very uniquely Indonesian or Southeast Asian. Because the challenges here were very different. Any examples that all of you can share about, either from your respective companies or that you've seen outside, where you think that Indonesian or Southeast Asian innovation has gone global? Any of you can, if you have examples where what you're doing in your companies, which similar companies in other continents in the US or China or India are not doing, where you think this is innovation that can go global?
Yeah, I mean, I can start with that, right? So for us, I like to think that Southeast Asia is interesting from the standpoint that I can conglomeralize, right? And if you look at us versus the Chinese comms or the American comms, they tend to be, one of the good things is that they tend to focus, but the bad thing also is that they have multiple different competitors in literally every single verticals in that sense. And for us, while we have no and zero intentions to be a super app, the truth is that we are operating like more like a pseudo conglomerate in that sense, because today, not only do we sell cars, right? But if I went back to China or I went to my US shareholders and I say, oh, by the way, I have a stake in a bank, I run one of the largest financing books here, oh, by the way, I have an insurance license, or, at the same time, I have a after-sales network and stuff and whatnot, they will struggle to understand, because to them, it's like, you know what, you just do one thing and you do one thing right, and this is the way it works, right? But for us, in our part of the world, the truth is that there's a lot of network effects, right, for me to do this. So, and the reason why I do this is also all very different and is actually very customer-centric. Let me give you an example on this, right? So the reason why I say this is because if you're in Indonesia, if you're trying to buy a car, it's really not easy to get financing, right? You probably need to wait a week, 2 weeks sometimes and stuff and whatnot. And that is an issue from a customer experience standpoint, who will not be seeing this if you're in America. You'll be like, oh, you know what, I just get financing like literally straight away, right? But that doesn't really happen in Southeast Asia. And for me to deliver that kind of seamless experience requires me to play in that space, in insurance, in lending, in after sales and stuff like that. And that's the reason why we did that. And I would say that that would be something that is unique to Southeast Asia. And generically speaking, I would say that that's something that the Americans or the Chinese will not understand.
Aaron, just one more question. Indonesia and most of Southeast Asia, maybe with the exception of Singapore, is a predominantly two-wheeler market, not so much, or more two-wheelers than four-wheelers. So do you see, you getting into the two-wheeler segment? Because in terms of a market opportunity, that's much bigger than, say, the four-wheeler segment.
I mean, if from a market size standpoint, two-wheelers is about 10% of the auto industry. So global motor industry is about, say, 230 billion. Global auto industry is about 2.8 trillion, right? So it's about 10%. So in that sense, it's still small, way smaller. But do we do something in auto? We do. I mean, in motorcycles, we do, but not a lot, to be very frank. We have interest in, say, JBA, which is a larger auction house in Indonesia, and that transacts thousands of, like 4,000 or 5,000 units of, in fact, more than that, 6,000 or 7,000 units per month. In Indonesia alone. And then in Thailand itself, we also have an auction house that sells motorbikes. So we do quite a bit of disposal of motorbikes, but we don't intend to sell or move into that space in a big way. Because to be very honest, I think there's a lot of wood to chop in the auto four-wheeler space today.
Anderson, back to my original question in terms of Indonesian innovation going global. Any examples you can think about?
Yeah, I actually really agree with Aaron here. I think that the conglomeration of products, and that includes also fintech, is a lot faster in Southeast Asia than others. I think that you do see this happen in other developed nations, but it does take many, many, many years once they go from single product to multi-product, because it is very complex in financial services actually when you go to multi-products. But I think that just because in Southeast Asia, like, we were really born into this ecosystem where almost everything ends up being conglomerized or super app or whatever term you want to use, then the idea is less foreign for companies coming out of this. But actually, one of the other examples that I do want to highlight is that one thing about, like, Indonesia is that it's not just about financial inclusion, but the financial literacy level is actually even lower than the financial inclusion level, which means that there's, like, areas of Indonesia where folks are already included in the banking ecosystem, but then their understanding of how to use these products is still not there yet, right? And I think one of the things that we try to do is that we collaborate a lot with governments and local institutions to do education on the ground. Like, we've done like over 100 different education throughout the pandemic to all areas of Indonesia in Tier 2 and Tier 3. And I really hope that other fintech companies around the world also adopt this. It's like, yes, you're mobile first, you're online, but I think that there is some form of social responsibility as well to ensure that the folks you're offering the products to understand and are fully literate about the products that you're offering.
Rizky?
Yes, Joji. For Grab, it's always, our missions to, plan, execute, with local eyes set on. We even have a terminology for this. We call it hyperlocal, definitely. And this is one of the reasons as well we built a tech center headquarters in Jakarta, Indonesia, amassing, hundreds of engineers and product developers to make sure that we develop things that is to address local problems. And one of the, couple of examples as a result of this is our Grab Maps technology. Definitely, we are creating a specific technology for this, not only to make it beneficiary for our consumers, but in particular for our driver partners, make them easier, more effectively, more efficient in their journeys at the same time. We create our own technology for locations-based services, as well as street imagery technology. We call it Kartakam hardware and software. We put on helmet with camera on our drivers. This actually has helped to discover undiscovered routes and undiscovered roads. It's like millions of new routes that we discovered, making it easier for our consumers and our driver partners. The other example is our merchants application. It's not the applications that many of you usually use. It's the applications that is being used by our merchants, and it's being customized and catered toward the MSMEs markets because their needs are quite different. That's why we're building it in Indonesia, and it's being used in other countries in the regions as well where Grab operates.
I just have one quick question to each of the panelists on exits. Aaron, you've spoken about an IPO in the past. When do we see the Caro IPO happening, and in most likely which exchange?
Yeah, I think I would say what the previous panel would say, right? Which is at the end of the day, it's really dependent on the market, right? I don't really have a deadline internally. All I can say is that we are more than ready, right? You know, this is our second year of being PCAOB compliant, which basically means that, you know, our accounting has reached certain standards, which effectively means that we can be public anytime. And you know, as I said earlier, my revenues have also already crossed $1 billion this year. So let's just say that we are ready to, you know, potentially go IPO, but it really depends on the markets. If I have to put a time to this, I would say, you know, 2 years or whatever, right? Really depends on the market.
Anderson, is it too early for you, or let me just add to that in the sense that you are so closely linked with the IDX, in the sense that you're riding on the IDX as more companies list or as the IDX grows, it's good for you. So is it natural to assume that at some point you will also be listing on the IDX?
It's still early days for us, but we are more than ready to support Grab and Caro if you guys want to list any of your subsidiaries on IDX. We've helped multiple companies before.
Will do.
Happy to help you guys too.
Rizky, you've done one of the largest listings, meaning Grab, globally last year. So what's next for you? Is it the path to profitability?
Yeah, like went public, we're very blessed. We went public last December, and it's actually a trust from our investors, of course from our shareholders at the same time as well. But we always think that going public, it's not the end game. It's not the finish line. In fact, during our listing day, we keep on saying this is day one, day one. I mean, like you two will probably come into this stage later on. But it is very important when you go public. You don't see yourself. It's like this is it. It is actually not. It is actually the first day of your even more challenging journey. And then what we actually set our focus into is our definitely bottom line. But uniquely for Grab, we have a triple bottom lines. First is, of course, the economics, like you mentioned, the path to profitability. We always, set our focus definitely to deliver not only growth, but also improving financial performance. We have also the bottom line for social impact, just because we are the platforms where we are the home of many, MSMEs, name it the driver partners of the merchants. So we need to set our focus to delivering results for them as well. Especially during the pandemic, we see many of the cases where we are benefiting and empowering them going through this pandemic. Many of them actually, including the marginalized, traditional wet markets. I mean, you wouldn't think that they will benefit from this. At the traditional wet market during the pandemic, the visit was almost zero. And their business was like, almost wiped out. Thanks to technology, thanks to digitalizations, that has helped them to actually tap in markets that they didn't think that will tap into before. Usually for traditional wet market, the visitor was, people in the close proximity. But now we're able to expand our markets. By now, the purchase come from like 10 kilometers, 15 kilometers away, and from the markets that they didn't think of before, like apartment buildings, tenants. The thing that we need to set our eyes and focus on. And the third bottom line is sustainability. I fully agree with Aaron's comments before on EV, definitely. We see the futures of EV. We are right now, Grab is the biggest EV operators in Indonesia, 8,500, but it's far from the final goal, definitely. Government of Indonesia is setting the target for a net zero carbon by 2060. We have set our carbon neutral target, Grab, by 2040. Government has set the 2.1 million EV of two-wheels vehicles by 2025. So it's something that we're really serious into right now, and it's something that we need to set our focus on.
We had a very enlightening panel discussion. Thank you to all three of you. But I want you to, as we leave, I want you to leave our audience with your predictions for 2023 and beyond. Just take less than a minute each. We may be in a whatever you call it, a recession or a downturn. So what are your predictions, each of you? Aaron, Anderson, Rizky, just take a minute each.
Sure. For me, there's two things. MSME digitalization definitely will still play a very crucial part. At the moment, only millions of the MSME are digitized, and the government is setting their eye to make 30 million of digitalization of MSMEs by 2024. The second thing is electric vehicles, definitely. I mentioned that it is the future. Indonesia believe of the electric vehicles. It also happens to be the country that has one of the biggest, if not the biggest, nickel deposit in the world. And it's setting its eye for 2.1 million EV two-wheels in 2025. So those two are the things that Grab is putting their eyes on.
Anderson?
Yeah, I think that we're going to start to see more interesting use cases of blockchain. I think that kind of what has happened recently has really exposed cracks in the systems and wiped out projects that are not really serious. And now is the time where we're going to start realizing that there's many more ways than we can ever imagine how blockchain technology would redefine not just certain industries, but almost all industries, the way that the discovery of oil has redefined the way that we live. So I'm really excited to be part of that movement.
I mean, I don't really have a crystal ball, but I would say that for me, it's the accumulation of a few things right now, right? Higher interest rates, higher, you call it stagflation, inflation, and stuff like that. All this is going to come in and actually play a role in how we think about the general economy. From a macro standpoint, I'm actually pretty pessimistic in the region. I think ex-Indonesia, say Vietnam, which is actually pretty in a good shape, right? Because of all this rise in commodities and whatever not. I think there'll be greater, hopefully, equality in terms of wealth distribution, right? I mean, due to that, I think that would be great. But what I'm most concerned about in the next year or so really is the reduction of consumption, right? Due to higher interest rates, due to inflation or whatever not. I think that's something that we are really watching out right now as a company. And I think that is really what will drive the thesis and the business for Southeast Asia even moving forward.
Thank you, all three of you, Aaron, Anderson, Rizky, for sharing your insights with the audience. Please join me in giving them a big round of applause for taking their time to be with us. Yeah. Thank you so much. And I hope you all enjoyed the discussion so we can continue conversations over lunch. Thank you for staying on.
Thank you to all the panelists and also our moderator. And we'd like to request for you to please stay on stage and to please take a place on stage to take a photo op together. Once again, I'd like to invite to all our documentation team and our media partners to please prepare yourselves to take a photo of our moderator and also our panelists. Once again, ladies and gentlemen, may I have another round of applause for our panelists of our second discussion session for today, and of course to our moderator, for Mr. Joji Philip. Thank you once again for your insights and wonderful discussions, gentlemen. You may now return to your seat. Thank you very much.
And ladies and gentlemen, that marks the end of the panel discussion. And we do want to inform you for our next agenda today, we have a one-on-one business meeting at the BICC Nusantara Foyer. Startup pitching happening on 5 breakout rooms. And there will be an awarding session at 2 p.m. So once again, 2 p.m. the awarding session. In the meantime, we want to wish you to enjoy your coffee break this afternoon. We'll see you again at the awarding session at 2 p.m. local time. Thank you.